Hello and welcome to the 51st edition of Half Hour, a podcast starring me, John Polo Giudice, as your host. In today's episode, I'll be discussing investing and resilience with Abigail Taney. Thank you for coming on the show.
Thanks for having me.
Really appreciate it. So if you want to talk a little about yourself, obviously we're from the same town.
Mm-hmm.
What can you tell us a little about yourself and, how you got into investing and kind of what you've been doing?
Yeah. Well, first I want to say thank you for having me. I appreciate that you reached out.
Of course.
So my name is Abigail Taney. From Peabody, Massachusetts, currently living in Pittsburgh, Pennsylvania. And I day trade, which is really exciting. I do a little bit of life insurance, which is fun as well. And I'm huge into fitness, and a lot of things just brought me there, which is exciting, which I think we'll get into today.
Yeah, okay, wonderful. So just to kind of jump right in, for someone like me, I own some stocks. I don't own too many. I bought, a few years back, and I've just kind of held on to them. I haven't even decided to sell or to even look. Many of them are doing very well. Mm-hmm. Many of them maybe not so much, but I think I've made a profit in general. Mm-hmm. But what would you say to someone who wants to get into day trading? Like, what are some things to look out for? What are some things to learn about? How would one educate themselves?
Yeah. And I think that's a really good question because there are differences between day trading and investing as well. So as far as what brought me into investing, interesting story. My ex, who was, I think, in your grade as well. I won't bring up his name just for personal reasons, but so he is the reason that I invest. Very grateful for that. And I've been investing now for 4 years, since 2019. And the first stock I ever bought was Tesla, which is very, very interesting. And that kind of brought me into the things that I do now, which I'm very grateful for, because without that experience and I guess that guidance, I wouldn't be where I am today. Mm-hmm. So yeah, I've been investing for about 4 years. Most of my holdings are just in large cap stocks, so like Tesla, Amazon, Disney, a couple of REITs, which are mortgage-backed securities, stuff like that.
So, okay, what was the word you said? Large cap stocks?
Yeah.
Okay, yeah, so that's
like blue chip stocks.
Okay, so blue chip stocks are large companies. They're like,
yes, with big market capitalization.
So you could paradoxically call like a smaller company, like let's say you have a company that's just in Massachusetts or like in New Hampshire, that would be like a small cap, like if it has smaller revenue or?
Yeah, so like large cap stocks would be like Apple, Amazon, just leading companies within that industry.
Do you have any examples of companies that are, like is that even a term, like small cap? Like, I don't know, that's why.
No, of course. I believe, because I've been doing a lot of what got me into investing. At the point when I started to invest, I didn't have a whole lot of knowledge. Mm-hmm. And within the past 1 to 2 years, that's something I've took a lot more into. And I believe the term is small cap. Don't quote me on that. So that's something I'm going to have to just relook into. Mm-hmm. But as far as what we were talking about, like blue chip stocks, those are the large market capitalizations.
Are there other color chip stocks? Like, are there like red, green? Yeah, I'm really curious.
No.
Okay, so,
no.
And then a REIT, that's an REIT.
Mm-hmm. Mortgage-backed security.
What is that? Like, how would you put that into, for someone like me, into more like a lay term?
Yeah. So REITs are actually something that I started investing into recently. So I had the privilege back in 2020. One of someone that I watch on YouTube, his name is Jarrell Peters.
Okay.
So a lot of people call him JP. He is, so he does a lot of investing, a professional investor as far as real estate, investing, day trading, stuff like that. And I had the pleasure of being able to get on a phone call with him back in 2020 where I was able to ask a lot of questions that you're kind of asking me to him. And he's the reason I started investing into them. He posted one day about one of the ones that I have, which I believe is AGNC, which started back in 2008 when we had the crash.
Right. Right. There's a great movie about that. The Big Short.
I
think.
love The Big Short.
It's a good movie.
Yeah.
I had a investing club in college that me and one of my best friends I met out there, we kept it on life support basically. We kept the club running. We did what we could. There were only like 3 or 4 members, but we gave it over to the new guard, and now they took over now that we're both gone. But I think it's so important to be financially literate, and it's just I'm getting away from it, But what were you kind of going to make the point about our REITs, REITs?
Yeah, mortgage-backed securities.
Are they the same? Like the same, that mortgage-backed securities and REITs are the same thing?
Yes, it's just the term for that.
Gotcha.
So typically REITs are going to have, and the reason why I personally like investing in them is because they have a high dividend yield. So for the viewers that don't know, some companies that are more on the stable end will give you dividends, which is just when they make profit, they'll give you a percentage of that for the amount of shares that you hold.
Right.
And so that's something that I've gotten more into. So I hold 2 REITs, so the AG and C, and then I think another one is MWP.
Okay.
Can we redirect?
Is it like investing into a typical stock? Because I was listening to every word you said.
Yeah.
I really was. So those 2 that you just mentioned, is that like investing into a typical stock? Like, is that something I could just go on the app and be like, hey, I want to buy like 3 shares of Tesla right now? I mean, that'd be very expensive, but is it like this, or is it?
So it is like that. So a lot of the REITs are typically going to be on a lower price end. So it's not going to be like an Amazon or a Tesla where, the buying price is like $200, $150. So at least the ones that I have, AGNC, that I think is $10. MWP I think is like $4, and typically what that is it's just giving the average person a way to own real estate without actually owning real estate. So the REITs.
So you're kind of like a crowdfunder, like in a way. Like if I were to go buy at like 1 share of whatever this is, right? It would be like me being like I have ownership, but it's kind of like I have no control over what the company's doing. But I'm putting in my capital to help the company kind of buy up more?
Yeah, so typically, so the companies, the REITs, the mortgage-backed securities, they're just companies that own different real estate projects. And so it's a way for the average person to get into real estate without actually owning real estate. And again, it does have a high dividend yield, which is something that's very attractive to me because you're making money with just owning something.
I think dividends are good. I would agree. Definitely.
Yeah. So that's definitely something that I've liked getting into within the past year. I'm still doing a lot more research on it. So sometimes when I talk about it, I get a little iffy because I'm like, just learning more about it. But yeah, so that's typically what a REIT is. It's just a way for the average person to get into owning real estate without actually owning real estate.
So those 2 companies that you mentioned, what drew you to them as opposed to like other companies?
Yeah, so the reason I got into at least holding AGNC, when I was able to get on the phone with the YouTuber Jarrell Peters, he was someone that posted just the profit that he's made with the dividends on that. And I saw the share price and I'm like, oh, that's really cheap, something I can definitely get into. I saw the dividend yield, which I think was 16%, which is
that's pretty good, yeah.
Super, as you know, that's decently high. And so I just started getting back in. Again, that company came about in 2008 when we had the crash. So I am doing more into it, or at least looking more into it, but that was kind of the thing that brought me into that, is I saw the person that I trusted, that I knows about investing. And so since I trusted him, that was something I got into. But I am doing more research on my own, at least.
Yeah, okay, that's wonderful. You seem like you're very well read, definitely more so than me. I know some basics. I wanted to get into dividend investing, actually. I think it's a pretty good way to kind of build like wealth over time. What other formats of investing have you kind of looked into? So you said you have stocks. Do you have any bonds?
So I did have bonds.
Okay.
I acquired bonds when I was super young, just something gifted to me. I think it was the Triple E series. definitely bonds are something that I don't have the most knowledge on.
Right.
But it was something that was gifted to me. Those are something I did recently just cash into.
Yep.
I own silver as well, so silver was something I got into during 2020 when we had COVID. Obviously, prices just dropped. And without having the most knowledge, because again, when I got into investing was with my ex in 2019, and I didn't really look into much. So is whatever brought me to thinking now would be a good time to own something like that. I don't know if it was God, I don't know if it was the universe. It was just something that I felt like I had within inside me,
Right.
where I'm like, now's the time.
Right.
But yeah, so I do have a couple different couple different things that I own. Most of it just being individual stocks, silver. I did have bonds, which I no longer have. Real estate, something that I'm definitely looking to getting into. I would say within the next 1 to 2 years.
Okay. Yeah. So stocks, bonds, what was it? Mortgage-backed investment security? Is that the term?
Yeah. And one thing that I think is important to bring up as well is that when you get into investing, day trading, there's lots of different strategies that you can use. So, there's long-term holds, growth stocks. And so a good example of that and something that I would like to get into is that when COVID hit, I was only about 6 to 8 months into investing at the time, so
Right.
didn't have a whole lot of knowledge. Again, Tesla was the only stock that I owned. And COVID hit, and as you know, everything just dropped as far as prices. Everything dropped. And something within inside me just said, now's the time to like look into it for whatever reason that was. And so what I was looking into with the economy being the way it was is what can I invest in now, where when the economy is back to normal, it's going to go back to the normal price. And so I was getting into a lot of growth stocks at the time. So airlines, I got into marijuana companies as well.
That
And-
was smart because they're becoming more legal as the years go on.
Yeah.
And I'm also thinking about how if you look into the past, the best time to invest is when it's near the bottom or at the bottom. But it's hard to determine when that is. But I think that, summer of 2020 was definitely
Oh, it was, yeah.
very much down.
It was a great year. And something that I messed up as well, and I would like to just say this for the viewers that are going to watch it so maybe they can learn from me. What I brought up with is as far as the strategies, when you do invest, you want to have a reason as to why you're doing it. And so when I first started, the thought process was for growth. And typically for growth, you're not going to hold for a long period of time. Again, it's not day trading. That's something that we could go into at a later date. But right when we got out of COVID, and I say got out of COVID, I don't even know if that's even a thing. But basically in 2020, the economy hit a point where it felt like it was thriving. And so a lot of the things that I invested in as far as growth skyrocketed. And so during the time of COVID, I would say I probably put in $3,000 to $5,000 at most. And I definitely tripled that. My account size after that was, I think, 17,000. And the thing that I messed up on was the mix of the strategies. So I was investing in growth stocks for the thought process of having it being long term.
What is a growth stock as opposed to just like a normal stock?
So a growth stock is typically going to be something with a lower market cap, a little more volatile, typically something on the newer side of things. So
it's kind of unstable.
Unstable, more room for growth, so not something that's totally stabilized within its industry.
And you mean market cap? Market cap is basically how much money this company is involved with in that industry, right? Sort of?
Yeah, the amount of shares held.
Okay, so
Yeah.
the larger the market cap means the more people own those shares? There's more shareholders?
Exactly.
And the more shareholders you have, is it seen as a more stable company? Or does that not really...
I mean, yes and not necessarily. So when you look at something, like if you look at Apple, for instance, like the market cap on that's in the trillions. Like Amazon's not even in the trillions. Tesla's not even in the trillions. So is that something that's stable? Yes. I mean, when you look at that and you look through the 3-month, the 1 year, the 5 year, you want to see where the price is moving to. And if it's just all over the place, that's something that can be concerning. But typically, blue chip stocks, the one with high market capitalization, are going to be the ones that give the dividends as well, because growth stocks don't have the stability. And so the profit that they're taking, they're typically not going to give out to the shareholders. And so that's something I've switched over to as well. Like the other day I was looking at my current portfolio, and a lot of the stocks that I bought in 2020 I still had that are no longer doing that well. And so could I still hold on to them and say maybe in the next 1 to 2 years they're going to grow? Yeah. But I also want to take the time to clean up what I have and make it the best that I can. And so I sold a lot of the stuff, even with it being down. And I'm just thinking of where can I put that money that's going to best grow. So a stock that I'm looking into as well is like AI. So I would recommend everyone look into investing in AI. If you don't, I think you should. Chewy as well. But yeah, so like Verizon, super stable stock. The price rarely moves. Apple, Disney used to be on the S&P as far as paying out dividends. They actually no longer do that for the reason I actually don't really know. That's something I do need to look into. But I still own Disney. I mean, it's not going anywhere.
Yeah. So you had me thinking after you brought up AI, what is your thoughts on crypto? Is crypto something that is reliable or investment strategy that makes sense? Or would you tell people maybe sit this one out en masse, maybe buy a little bit? What do you think?
So I am going to have an opinion. I'm not a financial advisor for the people that are going to watch
Neither
this.
am I. Yep.
So whatever I do say, take it with a grain of salt. Crypto was something that I got into back in 2020, I believe. So when Bitcoin was at the high of 60,000, that was when I first started getting into it. It's something I've held. I actually recently just sold some of my crypto more for just a personal reason. There was something I had to pay off, and it was liquidity that I wanted to just take from. I think that there's a lot of regulation coming. Is it bad? I don't think so. I think, Ethereum's going to stay, Bitcoin's going to stay, but you think of all the other coins like Dogecoin, Shiba Inu, I think that's the one it's called. There's another, just like the weird altcoins, those are not going to stay. There's just no purpose behind them. And so the ones that are going to stay are the ones that were created with a purpose and a standpoint.
Okay.
And I think those ones are going to stay. I think investing in Bitcoin, I know a lot of people do it. Robert Kiyosaki owns I think he has 3 holdings in Bitcoin. The YouTuber that I was able to get on the phone with, Gerald Peters, he owns a Bitcoin. So I think it's good to hold on to diversify. So like the day trading that I do, a lot of the payouts with the companies that give payouts pay within Bitcoin. So a lot of them don't necessarily do direct to your bank account. They'll pay out within cryptocurrency. So I think it's something good to have. I think it diversifies the portfolio, especially with regulation and stuff like that, and just the uneasiness of our economy and the government and stuff like that. So I think it's good to have, but it's very little of what I would put as far as my investments in portfolio percentage.
Okay. So, we've covered stocks, bonds, mortgage-backed securities, AI, crypto. This is a very well-rounded podcast already. But what is it like day trading? Like, what's the experience like? You hop on your laptop and then you're looking at the graphs on. I use Yahoo Finance. I like Yahoo Finance. I don't know if that's a good one.
So I'm actually really glad that you asked, because day trading is something that I've been doing now for roughly a year and a half. So back in 2022. I had a friend that I knew from an investing standpoint. So a lot of the things I mentioned earlier that I got into now all came from the standpoint of just getting into investing. And that was something she did, and there are different markets that you can go into. So for the viewers that don't know, you can invest, or not invest, you can day trade in the stock market. You can do Forex, which is currencies, which is what I do. You can do options, you can do cryptocurrency. So there's a lot of different markets that you can day trade in. One is not necessarily better than the other one, but I personally do Forex. And I'm so sorry, what was the question?
Like, what is day trading like? So it's like, what's the experience like? You know, like, let's even go more specific, because you said you do Forex. So what is that like? Like, you kind of hop on there, and I know a bit about currency exchange rates, a little bit. Like, you know, I lived in Prague for 2 years, and, you know, I had to look at when the U.S. dollar was in a good position, and then maybe that's when I'd exchange my currency to go spend it on beer and other stupid things over there. But my main point is, well, the beer is actually quite cheap. Prague is definitely worth a visit. It's very cheap. It's very great. They have the best beer. But so are you, you know, in the morning you might buy like X currency and then sell it later in the day for a profit?
Yeah, so as far as day trading is concerned, so I did mention that I trade Forex, and Forex is a 24-hour market. So you think of New York Stock Exchange, which is only open from 9:30 up until I think it closes at 4. So the Forex market, you do have you have New York, which is again 9 to 4. You'll then go into Asia session and London session. So it is a 24-hour market, which I think is nice. And the thing that drew me to Forex, because again, I started investing in stocks, so that was the thing that I had the knowledge into. And when I was looking into that, my thing is that I didn't have the capital. In order to day trade, you have to have the capital. You're just not going to make it if you don't. And so that was kind of the thing that stirred me away from that. But then when I did get into Forex, it was really just understanding what my schedule is going to be like. So at the time, I did have a full-time job where I was working 7 to 4:30. And sure, could I totally go day trade at midnight? Yes. But am I going to do that? No. You know, sleep is not something that I'm going to give up for something like that. So I was just trying to think of how can I readjust my schedule for that. So as far as what I do currently, because I do invest, I do day trade, and I do the life insurance as well. So typically my schedule will look like I'll get up at 5:30 in the morning every day, weekends included. I can't remember the last time I slept in. I'll go to the gym, so I'll do the gym from like 6 to 7:30. I'll then go on my laptop, and that's typically when I'll do markups for the currencies or pairs that I trade. So for me, I trade a lot of gold, so gold versus the US dollar.
Okay.
And that is the pair that I mainly focus on.
When you say like markup, so you'll sit down like, you know, in the morning, and you'll kind of like log on, and your first step would be to, are you buying you're not buying the actual money or the gold, but you're buying like help me out here, I don't know.
Yeah, no. So so when you trade currency pairs, so like you'll have, you know, the British pound versus the US dollar, or you'll have the US dollar versus the yen. So typically the first currency on the top, there's names for it and I forget the names for it. But there's a base price. So right now gold versus the US dollar is sitting at, I think, 2,053. And that's
Like
just
per
the price.
pound?
Yeah, that's just the price for gold. And so, so when I go in the morning, I'll typically just do markup. So I'm not buying anything or selling at that current time. I'm just looking to see where it was or where it was yesterday. My strategy, which is just price action and breakouts. So the other week, gold actually had a major breakout where it hit 2,100. Now, it didn't stay there. There wasn't enough push action to keep it there, so it did sell it back down again. But that is what I'll do typically from 8 to 9 is I'll just do markups, and then 9 on is when I'll look at when it's going to hit a price of area of interest to buy.
What would you recommend to, younger people that are just getting out of college, like myself?
Yeah.
Or, just younger people in general, 18, 19, all the way up to like their late 20s.
Mm-hmm.
Not as a financial investor, this whole episode is not about that. Take what she says and what I say with a grain of salt. That is true. What would be some things you could recommend to this demographic,
Yeah, and I love that you asked that question because this is something that I'm very passionate on. I'll teach people, and again, not a financial advisor. I just take what I do give. I take off based off what I know and just what I have going on for myself. But I think this is something that's extremely, extremely important. Just taking accountability for yourself and your financial health. Because if we think that, like just for instance, Social Security, like if we have to rely on that itself could go out, So anyone that's getting out of college, I think then the main point, obviously, do what you can to make income, and that can be different for every other person. So you obviously graduated. I graduated community college back in 2022. And right out of there, I just had a full-time job, and I was miserable. I was so miserable. And entrepreneurship is something that I just always thought I would do. So for me, it was kind of just a matter of time until I found something that I was going to like. And that for me is day trading. I love day trading. It's not for everybody. And I could try to teach as many people as I can, but it's not going to stick with everybody. It's just not an everybody thing. But I think getting into financial health and just setting yourself up with investments is huge. And you can do that in whatever form that is. You can do that in just retirement funds. You can do that mutual funds. It does not have to be something extremely risky. But just setting yourself up for your future at such a young age is something that is obviously not taught, as you know. And it's something that I'm really passionate about because I think having the mindset of it's going to be taken care of for me, like 401ks, like that could go out. And then what are you going to do? You're going to lose everything?
Yeah, something I heard a lot about was a Roth IRA. I don't know too much about it. I know that you put in a certain amount of money per month or per week or whatever it is, and then it builds interest for you.
Yeah. And a Roth IRA was something that I had as well. It was something that I made a personal decision to cash out on recently. Again, a personal decision. I'm 25. I'll be 26 in 2 weeks. So it's something that I know that I can always get back into, obviously, before 30. But a Roth IRA is kind of similar to a 401k. So it's just a lot of mutual funds. And it typically just has a very steady return on it. So I believe the return annually is roughly 7%. Which is extremely good because it's not something that you're typically going to touch until the age of 65. So it's just a retirement fund. But it is good for people if they have an employer that doesn't offer a 401k or they're self-employed, you can go into that as well. It's not something that I would put all of my money into. Again, it's a slow return. So it's something that you'll notice, again, by the age of retirement. It's not something that you're going to cash out on in 10 years, if that makes sense.
No, okay. So for that demographic that we talked about, you'd say like mutual funds are something that are really attractive for younger people, like to kind of get into?
I think it's attractive for the people that don't know a whole lot about investing. And I think about it for myself, like when my ex first brought up investing to me, I was terrified. Like I remember when he was pushing me to get into Tesla, he actually, back in I think it was 2016, 2015, like he actually brought up Bitcoin and he's like, oh, you should invest in this thing. totally should have, obviously didn't. But I think for people that are not in the space, that thought can be really hard, because when you
it can be.
work a lot of hours, you have bills, you don't want to think about losing your money, and when you don't know what you're doing, that's kind of the first thought that comes to mind. And so whenever I talk to people about investing, I'll typically always, I don't want to say push them, but I'll always typically guide them in the safer route, which would be, you know, a Roth, which is mutual funds. You could do ETFs, which is similar to a mutual fund. It just holds a lot of different sectors. Or I'll just guide them to like blue chip stocks. So again, like Amazon, Tesla, Apple, just something a little more stable, because I do think it's important for people to see return.
So what are, yeah, they're closing the doors on us. What are, what's an ETF real quick? What is that? Like, as a, does it stand for something?
Can we hold?
Yeah.
So, yeah, so there is, I forget the name.
So an like, what is the difference between a typical stock and like an ETF?
Yeah, so an ETF is similar to a mutual fund, as in where like a mutual fund holds typically multiple different sectors or just multiple different companies. So when you go into ETFs, which when I get home, this is something I'm going to look into, because I literally forget what it's, electronic.
Here, let's look it up.
Not transfer. It's electronic something. But an ETF is similar to a mutual fund, as to where it holds multiple sectors. So you can go into growth ETFs.
Exchange traded fund.
Yes, there we go. I knew it was something like that.
It's bad because I took a course on this in PV High.
I feel bad because I'm like, I should know this. But yeah, so what's nice about that, again, similar to that, where it will have a smaller return. So typically ETFs are going to have that dividend with it as well. Sometimes there is a charge rate. So depending on what you have, they will charge you per year for holding it, which is super small. Typically it's like 8%.
Okay.
Nothing high. But yeah, so one of the ones that I have is, I believe it's HDV, which is an iShares ETF, which I think is on the more stable side of things. So I believe that holds Coca-Cola, it holds Verizon, it might have Apple, and there's a lot of different options. So definitely something to look into. There is something for everybody. So if you want to go on the growth side of things, you can find a growth ETF, which might have a higher dividend yield, or you could go on the more stable side, which is, again, something that I would guide people to go into, just so they can see the stable return on that and slowly get into it, which I think is important for people.
So this is a very dense episode. I really think it was really good. I've done, 51 of these, and I think this is a very informative one, so I really applaud you on that. If you want to leave the audience with a minute or two message before I end it here, because I'm getting really close to my work time, but I would go, usually it goes between like 26 minutes and 39. So it's like a half-hour show. Yeah, it's like kind of on either side. But if you want to leave the audience with a quick thing, you're more than welcome to.
One thing I would say is just believe in yourself. I've had a lot of diversity in my own life and things that I've had to overcome, and a lot of that didn't come with a support system. And I would not be here if I didn't believe in myself. So definitely take that and just have faith and have fun.
There you have it.
Because investing should be fun.
Agreed. Okay, thank you so much for coming on.
Thanks
I really appreciate it. Guys, like, comment, subscribe. Check out the next one that's coming out. Don't know when that's going to be, but cheers. Thank you. Bye-bye.